Introduction to debit and credit cards. Debit and credit cards are widely used for making payments, but they operate differently. Understanding the key differences between these cards can help you choose the best option for your financial needs. Definition of a debit card. A debit card is linked directly to your bank account. When you make a purchase, the money is deducted from your available account balance. It functions like a digital version of cash, allowing for immediate payment without borrowing money. Definition of a credit card. A credit card allows you to borrow money up to a certain limit set by the issuer. Instead of using your own funds, you are borrowing money from the card issuer, which you must repay, often with interest if not paid off in full by the due date. Payment method. Own funds versus borrowed funds. With a debit card, you are spending your own money that is already in your account. A credit card, however, uses borrowed funds that must be repaid later. This distinction is fundamental in understanding how each card impacts your financial management. Interest and fees with credit cards. Credit cards typically charge interest on outstanding balances if they are not paid off in full by the due date. Additionally, there may be annual fees, late payment fees, and other charges. Debit cards, in contrast, do not charge interest since you are using your own funds. Impact on credit score. Using a credit card responsibly can help build and improve your credit score. Timely payments and maintaining a low balance relative to your credit limit contribute positively. Debit cards, however, do not affect your credit score because they do not involve borrowing money. Risk of overspending. Credit cards may encourage overspending, as they allow you to borrow money beyond your immediate financial means. Debit cards are less risky in this regard since you can only spend what is available in your account, preventing accidental debt accumulation. Security features. Fraud protection. Both debit and credit cards offer fraud protection, but credit cards generally provide stronger consumer protection. If your credit card is used fraudulently, you are not liable for most charges. With a debit card, unauthorized transactions may require more time to resolve, and funds are deducted directly from your account. Availability of rewards and perks. Credit cards often offer rewards such as cashback, points, or travel perks as an incentive for spending. Debit cards typically do not provide such rewards, though some banks may offer limited benefits for using their debit cards. Control over spending. Debit cards provide a sense of control over spending, as the transaction is limited by the amount of money available in the bank account. Credit cards allow for greater flexibility but can lead to debt if not used carefully. Conclusion. Key differences between debit and credit cards. The main differences between debit and credit cards lie in how payments are made, how they affect your financial management, and their impact on credit scores. Debit cards use your own money, while credit cards allow you to borrow money, with associated risks and rewards.